Hello and welcome to this week's special presentation. My name is Jim Penna. I'm the Manager of Retirement Services here at VectorVest, and I'm very happy to be hosting this week's topic, which is titled Back to the Basics with VectorVest. With headlines moving the markets day by day, it's very difficult to decipher when bad news in the economy is good news for the market or vice versa. Right? We find ourselves sitting on the edge of our seats and we wait for numbers such as weekly unemployment claims, GDP, CPI, the PCE numbers, and all the other data that drives the market. For example, recently initial unemployment claims climbed to 198,000 that topped Wall Street's expectations, right? Meaning there were more unemployment claims from the previous week. Meanwhile, the estimate of fourth quarter GDP came in and it was actually below the estimates revised from the fourth quarter of last year. These numbers, showing perhaps a slowing economy, help lift the markets over the last few days, determining what bad news for the economy is good news for the stock market. So it can be overwhelming at times to try to decipher all that, but whether it's the macro view of the overall markets or evaluating your current portfolio, the VectorVest program gives you the power to recognize, to analyze the important factors that you must focus on to succeed in any type of market. So going back to the basics with VectorVest is designed to keep you from being overwhelmed by the day-to-day headlines and using the program to keep you focused on what's important. So I'm going to focus on three different basic tools to help keep you grounded as you manage your portfolio. Right, the first one I'm going to talk about is the market climate graph, the ability to get a 30,000 foot view on the overall economy and the important factors that affect the market. Next, we'll talk about your VectorVest watch list, right? Creating a watch list of stocks that you currently own. So again, you can recognize and analyze any actions you need to take to manage that portfolio. And then finally, we'll talk about the VectorVest market timing system and the importance of understanding and recognizing trends in the market to make you a better investor. I'm going to start with how the market works. It's from a talk that when I first started at VectorVest, it was the first talk I heard Dr. DeLito give that he created a long time ago about how the market works. VectorVest believes the stock market is driven by earnings, inflation, and interest rates. That's what drives the market. So we say stock value increases when earnings go up and when inflation goes down and interest rates go down. And so inversely, of course, when earnings go down and inflation and interest go up, it hurts the market and the market goes down, which we've seen for well over a year now in the markets. So it is important from a strategical standpoint to understand where the markets are, where these important factors are. And so to do that, I want to take us into the VectorVest program and we're going to go into a market climate graph. So when I choose graphs, I have my market climate graph set up. Click here to find the market climate graph. And you can set up your graph here. And what I have it set up to is the earnings trend indicator at the top. Okay, this is the VectorVest interpretation of the earnings per share on the S&P 500 based on a 0 to 2 scale. Okay, anything above 1 being favorable, below 1 being unfavorable, but we also can see the trends within the earnings of the S&P 500, and we can clearly see how these have worked. I have it set to a 2-year look back here so we can get a good view of what's been going on. Now that's the earnings trend indicator at the top. Below that, I have the CPI and CRB numbers. That's Consumer Price Index and the Commodities Research Bureau. The CRB tracks 19 different commodities that are important to the core economy that we follow. And then the CPI, of course, is the Consumer Price Index. And we can see how those have risen over the last 2 years, peaking back in June and July of 2022, but still at relatively high numbers. And then down below, to track interest rates, I've added T-bills and T-notes, right? Treasury bills being the shorter term treasuries, T-notes being a little bit longer. And so we see these very high as well. And so this is on a weekly basis that you see here. These are not daily numbers, but every Friday we update these numbers. So as of March 24th, we can see the CPI, or the inflation rate, at 6. Treasury bills has ticked up actually a little bit from last week, just under 5% on 3 and 6 month T-bills. And then the longer term T-notes, I think, is just a fraction higher now as well. So when we talk about tracking earnings, interest, and inflation, this graph alone, this 2-year look back on the graph, is very telling to give me a strategic view of the overall market, keeping in mind that the market climate graph is not really intended as a market timing indicator, because it is longer term and again, that more macro view of what's going on. But it's very important to understand how the overall market's may move in the future, and what industries, what sectors will benefit from that. And so it's a very important place to begin with. Now, you can add parameters. There are a lot of parameters here that you can put on. Whatever parameter you see with the VV indicator after, just simply puts it on a VectorVest 0 to 2 scale to give you an idea of what's favorable or unfavorable. You can right click to remove those. This is how I default my personal market climate graph, because just that picture alone tells us a lot about what's been going on in the market over the last couple of years. So of course, what we'd like to see as we prepare for the next phase of the market, if it's to move to the upside, is for the earnings trend indicator to continue to rise. It had a quick tick up. Now it is above 1 at 1.02. It ticked up week over week last week. We'll see where this week's takes us, but until that earnings trend indicator can begin to move up, until interest rates and inflation, these graphs can continue to fall off, right, and reverse their current trends, that's when we'll see a stronger market and have much more confidence in building and managing our portfolios. From here, I want to talk about the VectorVest watch list. So the next basic task that I believe is very important for you to do is to go into a VectorVest watch list. The VectorVest watch list instantaneously gives you the answers to making better investment decisions. So you need to create a watch list of stocks that you already own if you are invested now. So a lot of folks I know from our retirement coaching group and from talking to folks are well into cash right now. But if you have positions, right, you want to be able to create a watch list of stocks that you already own so you can start separating the winners from the losers. Now, in the VectorVest program, we use rank analysis in our watch lists. The default rank is by the VST vector, the value, safety, timing vector. The best stocks automatically come to the top of the list. The worst stocks are at the bottom of the list. So the idea is we start kind of from the bottom and weed that garden, right? Get rid of the stocks that are not performing. We want to favor keeping the stocks that are at the top of the list, and we worry more about those who are not performing. So we'll go back into the program, and from here I'm going to go to the main toolbar and choose the Viewers tab. What I've done is create a couple of watch lists. The first one is called My Stocks. So let's take a look. So I created this theoretical 10 stock portfolio to illustrate the power of creating a watch list of your stocks. So while it may seem pretty basic, the amount of information that you're looking at here for individual stocks and for your overall portfolio with our watch list average that we can see is really very powerful. So with this random list, I just created a watch list, a theoretical watch list. We've got the top 4 stocks. They're all buy-rated stocks. I begin to walk through the spreadsheet column by column. I look at the relative value, relative safety, relative timing, right, on that 0 to 2 scale, all very strong, high VST ratings on top. So as I manage this day-to-day volatility, I can open up my watch list and I can feel pretty comfortable knowing that these top 4 stocks, I'm not too worried about those right now. They're good performing stocks. Yes, they'll have their up days and down days, but overall for the longer term, we're in pretty good shape. I begin to move down. We've got a couple of, so those are buy rated stocks. We have a handful of hold rated stocks here. As I look, a stock like Interactive Broker, right? An undervalued stock with a relative value of 1.59. That's the 1 to 3 year price appreciation potential of that stock. So it's very strong. Relative safety is excellent, right? One of the most important indicators, I believe, that we use. Currently, the stock is in an uptrend because that relative timing is above 1. As we scroll over, it's important to also go through the important numbers of earnings per share and growth rate, especially growth rate, right? So when I look at these top stocks, I can see an earnings growth rate in percent per year. That is very strong, and that's good to know on the stocks that you currently own. Now, if you are looking for dividends, not a lot of these pay a dividend, but if they do, you should make sure that dividend is safe, that dividend is growing. So the idea is to be able to weed out the losers. Those that you have to worry about are going to be found at the bottom of the list. Wayfair is right at the bottom of the list when ranked by value, safety, and timing. It's what we call the 3-time loser, right? Relative value, safety, and timing all well below 1. The comfort index, the earnings per share, the growth rate, very, very weak numbers across the board here. So as this market develops, if you are fully invested, you want to go through and free up some of your allocation, this would be the place to start, right? Guardant Health, another what we call the 3-time loser. These are negative growth rates, negative earnings per share, right? Affirm Holdings. These are examples. If you own stocks currently in your portfolio that have numbers that look like this is where you're going to begin to, as we say, weed the garden. I like to use the baseball analogy, right? If you're the manager of your baseball team and your second baseman makes 3 errors a game and strikes out 4 times a game, you're not going to leave him on the field, right? You're going to put him on the bench and you're going to put a better player on the field so that your team can perform better. It's the same idea that we use here. Now, when I come down to our watch list average, you're able to take a look at the average of all of the companies in here for all of those important factors that we talked about. Earnings growth rate, the average is 15% for the entire portfolio. You can see relative value, safety, timing, and all of the important numbers. Okay, so let's see the effect of coming in here and weeding that garden, as we say. So the first thing I'm going to do is right-click on Wayfair, and I'm going to delete that stock. Right, I'm going to sell that stock, get it off the field, as I said. And right out of the gate, we see relative value, safety, and timing spike up a little bit. The average VST moves up because we got rid of that poor performer. So assuming the market timing indicators based on your objectives and your investment profile, that you're ready to go replace that stock, let's take a look how just taking 1 or 2 underperformers out can affect that overall portfolio. So if I go back up to the stock viewer, I'm going to go ahead and take a look, and I'm going to look at the top ranked stock currently in the stock viewer page. This is out of 9,100 stocks. The highest ranked VST stock in there right now is First Citizens Bank, right? The A shares. So FCNCA, I'm going to go ahead and add that to my watch list. So I can right click, I could click add to watch list, and then it's going to allow me to come to my watch lists, to my stocks, and I'll click OK. And what I've just done is added that stock to my watch list. It's now the top ranked stock in my portfolio. Okay. Obviously the relative timing indicator, and with all the headlines of the regional banks coming into play, but it's the best performer in our portfolio right now in our database. Relative value, safety, timing, all move higher. Based on that, our VST average goes to 1.23. Okay, our earnings growth rate has risen. Right, we're just improving our portfolio. It seems basic. That's why it's in Back to the Basics. Right, it's a powerful tool that you have in the VectorVest program. If you don't already utilize this tool, there's no easier, more powerful way to rank and analyze the stocks you own than doing it this way. So again, finally, you would just follow the process. I would get rid of the Affirm Holdings and replace that stock when it's the right time. Right? It's got to be the right time to reallocate into your portfolio. So that's a very important factor to keep in mind. We look at the market climate graph so far, we look at the overall macro view of the markets. We then come in, rank and analyze our current holdings. And once we weed that garden, the next step is to go in and determine when it's time to reallocate. So to do that, I'm going to start by talking about the importance of market direction. Dr. DeLito has always said, in reference to market direction, that the single most important thing to know is whether the market is going up or down, and everything follows from that. The idea is to let the trend be your friend. You buy rising stocks in rising markets. We sell falling stocks in falling markets. Remember, the VectorVest market timing graph clearly shows you when the market is rising, falling, or transitioning, right? And it gives you explicit market timing signals. To me, this is the most important factor when it comes to the market timing graph. Okay, the VectorVest market timing graph is your key to success. You need to follow the signal that best fits your investment style. I'll illustrate on the market timing graph that you should never ignore any of the signals that are shown. Watch it each day. You'll see from the primary trend to the confirm call, and everything in between is important to you. Doesn't mean you're going to act on every one, but you need to be aware of those important indicators. So I'll come back into the program and I'm going to choose the Graphs tab. And so from our market climate graph, I'm going to go ahead and take us into a market timing graph. And here in the market timing graph, I have it set to a 1-year look back. The VectorVest composite price is represented here in candlesticks. Down below are the important indicators of the MTI, or the market timing indicator, the buy-sell ratio, and relative timing. Okay, these are the important indicators on the VectorVest composite. Let's start with the home page before I go into the graphs any deeper here. We have our market timing gauge front and center on the home page of the VectorVest program. Secret number 3 to making money with VectorVest in Dr. DeLito's 7 secrets to making money with VectorVest is heed the color guard. Okay. Currently it tells us the color guard is mildly bullish and that VectorVest advocates caution when buying stocks at this time. Of course, we get a sense of where the major indexes along with the VectorVest composite are trading right now. Okay, and then we have our color guard. I have it set to an extended view, right? Yours may default to the 6-day view. I like to keep mine at the extended view so I can get a real good sense of what's gone on in the market over the last 3 trading weeks. So it's here in the color guard where we house the important components of price, relative timing, and the buy-sell ratio as they relate to the VectorVest composite price. And we can use these numbers to be able to track short, intermediate, and longer-term trends in the market. Let's start with that short trend. Under the trend header, that first column reads up. That's our primary trend of the market. It's up today because the VectorVest composite is up on a week-over-week basis. The green light is the next signal we like to see. Once you've gone into your watch list and you've weeded the garden, you come to the market timing page on the home page and it will tell you the price of the composite is up not only week over week, but day over day. That's how we have the green light through today's activity. Next is the RT column. That's relative timing. Again, on that 0 to 2 scale, it's ticked up day over day. And the buy to sell ratio has also ticked up day over day. Okay, so these are important indicators. These are shorter term indicators. The second column under the trend header is the market timing indicator, or the MTI, which we also refer to as the underlying trend of the market. So it's also on a 0 to 2 scale. Now it's still below 1, which leaves our underlying trend down, but because the market has moved up the last few days, we do see the MTI certainly tracking higher here over the last 5 or 6 trading days. And then finally, our confirm call. We'll take a look at that in the graph, but I just wanted to start on the home page to give you the sense of how we use market timing. And again, if you're a more prudent, a little bit longer term minded investor, you're not going to act on every primary trend that moves. Okay, you're going to probably use one of the more prudent or conservative or longer term signals that we use. But that doesn't mean you're going to ignore when we have red lights in the color guard or primary trend or underlying trends down, because it's going to be important to understand when to protect your portfolio. So that's a quick review of the homepage. I strongly urge you to watch Monday through Thursday the daily color guard report, and then on Fridays we have our extended timing session where we go through in deeper detail the current trends of the market. From here, I'm going to go back to the Graphs tab, and right on the Graphs tab, we're able to recognize this. The first thing I'm going to do is change it to 3 months so we can get a little closer view. We see that we had a recent, that was the 3-month low over the past 3 months back on March 15th, and the market has tried to rally, and certainly the last, well, today makes 6 trading days in a row that the market has been up, and we can see the correlation between relative timing, the buy-sell ratio, and the MTI are moving up along with that, and that's very important. However, they're all still below 1, and they're continuing to move up. This is why I commented on using the market timing indicators based on your investment objectives, your investor profile. If you want to allocate some to what some might call bottom fishing or seeing the market beginning to move higher, then by all means, be careful as you step into the market. Let's take a look at some of these on the graph. I'll start with the primary trend. And what we look for, again, once you've weeded out those stocks you no longer want, we like to see not only just the primary trend, I'd rather see the green light, but whenever you enter in, make sure there's follow through. Make sure the market is rising when you do replace those stocks that you've eliminated from your portfolio. So we want to be sure that the market has the follow through. Right? Because these, especially the primary wave, it could be volatile, it could whipsaw. Next is the green light buyer. This is an important one. We want to see a green light in the price column. We can get a primary trend up without a green light in the price column, but we like to see the green light. And then again, once we have that follow through to the upside, a great time to begin to replace those stocks in your portfolio. But again, it's important to get that follow through. We're starting to get the follow through now, and you can see we didn't get follow through back in some of these more recent green lights. Here back in February again, we got the green lights, but we didn't really get the follow through. Certainly didn't get any here, right? So it would have been smart not to have gotten into the market that next day, showing that the market didn't have that strength after the green light. Now here we're starting to see it, and we'll use this information again to make better decisions. Finally, we'll take a look at the confirmed calls. This is our most conservative look at the market. I'll take this back out to 6 months. We get a confirm up call when the composite is up week over week for 2 consecutive weeks, and the buy-sell ratio crosses above 1. When that happens, we get a confirmed up call, and again, for the more prudent, conservative-minded investor, that's a great time to begin to replenish your portfolio and to reallocate. So whatever your investment objectives are, right, whatever your investment profile is, you want to never ignore any of the indicators in the market timing graph and act on the ones that best fit your investment style. So going back to the basics with VectorVest is very important given the current market situation or in any market. I could talk for an hour on each of those 3 important factors of market climate, your watch lists, as well as the market timing graph. But I just wanted to introduce some very basic techniques to go in just to reset, to make sure that you're well grounded and have that foundation of what you're looking at. So get a sense of the overall market with the market climate graph. Make sure that you're aware of what stocks in your portfolio are performing, where you need to pay attention on those stocks that were at the bottom of the list. And then finally, when it's time to replace those stocks, heed the color guard. Use the market timing system in the VectorVest program to help you make better decisions and put the probability of being successful in your favor. So thank you for taking the time, and I look forward to seeing you next time.